Good afternoon. Welcome everybody to this week's client support webinar. My name is Bennett McDowell with TradersCoach.com, and good to have you all here. Okay, let me know if you can see everything and hear me okay. Make sure all the audio is working good. All right, thank you. Excellent. Okay, good. Good. Okay, well, I hope everybody's doing well out there. Let me just go through a few administrative items. Any concerns or questions you may have, hey, feel free to go ahead and type those questions in the questions area. All right, first of all, just go over a few of the risks involved in trading. This is our webinar disclaimer. Of course, results can vary from student to student. We can't make any guarantees because it's the markets, right? Everything is probabilities. So, you know, it is possible to have loss as well as profit at times. All right, consistency is a factor of so many things. Trading approach or system, your strategy, your attitude, your, personality in terms of how you handle fear and greed in the markets and things of that nature. So all that comes down to very important elements in really driving your success. We do want you to also keep in mind that past performance doesn't guarantee future performance either. Okay, you can have a winning streak, you can have a lot of good things going on, and then all of a sudden the market changes, okay, from one trend to another. All right, so keep that in mind. And then finally, anything we talk about here, if you're gonna implement it, and we certainly hope you do, but run that by your financial advisor or whoever manages your money to be sure it's suitable for you. We don't know your personal situation, and of course, they certainly should. All right, so those of you that are into day trading, we recommend a prop firm. That way you're not risking your own capital, especially if you're doing it kind of on a shoestring, but if you have lots of money, that's a different story. But for many just starting out, this is a great way to go, simply because for the price of an inexpensive subscription fee to one of their evaluation accounts, you get free futures data. All right, it's not for trend trading, it's for day trading only. And you get a lot of benefits in terms of they have software that keeps track of your performance and all that kind of good stuff. So I highly recommend it. I think it's a good thing. And you can certainly from there decide how you want to do it. But, we have a link on our website. You can certainly use that. I'll put the link in of course, the recording below when I post this into the client support area. All right, several books are available. We got the new Art of Trading book now out, second edition. A lot of great feedback on that. Glad folks are liking that. We also have books on money management and Elliott Wave as well. And then our software here down below as well. So I know many of you have that already. All right, so let me just see if there's any questions coming in. And if there are, go ahead and type them in. I'll get to them in a minute, because the first thing I want to do is just talk a little bit about ASPI. And ASPI is just a stock that we happen to look at, I think on Stock Analysis Friday last week. I'm gonna open up the daily chart. And one of the things to be successful in this business is you have to look everything in context. A lot of people will just take trades and not look at the overall direction of the market and what they're really doing. So for example, this is a trend to the upside right here. And let me just get my pointer going here. So we had a nice trend move to the upside. Now notice the ART software captures this trend with quite a few pyramids. All right, and then the market moves up, and then we got a pyramid exit right here. We also have a couple of other signals that you could scale out called the ART reversals up there. So it did a really nice job taking money out of that move up. All right, but notice also too the context here. And this is kind of important. This is an Elliott Wave 3, okay? And we know that because the owl helps us with that. So when you have a wave 3 on the owl that actually looks like a wave 3 on the price structure, then that's probably a wave 3. So after wave 3, we're gonna get ready for a pullback, right? And that pullback is in the form of a wave 4. So when we take our fibs and draw those in there here, we have our wave 4, all right, hit the target zone, we're a little bit below, 15% of the time it does that, 70% of the time it just hits here, 15 it goes a little lower, and actually 15 can be a little shallow too. So that kind of hit that requirement. So now when we start bouncing along the bottom, we want to look for a breakout, right? And that breakout can be represented by a pyramid here as well. And so this was an ideal entry here with a stop really below here or below the pyramid. And then we're off to the races for what we hope will be wave 5. Now on wave 5, you got to remember, it's not going to go straight up. It's going to zigzag. So it's going to go up, pull back, go up again, pull back, because there are 5 waves inside wave 5. Now, one of the great things about getting in early, you don't really have to worry about the zigzags because you got profit here. As soon as you get the next pullback, you can move your stop here, and that may even make it a break-even trade at that point. But literally, if this is a wave 5, it shouldn't go below here. So a stop here really should not get hit in most cases, unless it's the wave count goes into something like a complex wave 4, which does happen. All right, there's no guarantees in the market, so sometimes we get a complex wave 4 that kind of throws a wrench in the works. But for the most part, what we're heading up into here is a wave 5, and so that's what we got into that area there. So we have a 3 here, a 4 here, and then a 5 into the target zone there. So kind of fun in terms of what the structure was on this. And it really worked quite ideal, okay? So keep that in mind. When you're looking at trades, okay, you obviously, when you look at this trade here, you don't want to necessarily go long here because you're kind of already up quite a bit and it's due for probably some profit taking. So you want to wait for that profit taking or even short that profit taking if you want to. But then when it starts to bottom and start to do this in a breakout, then the context is once again trending to the upside. So I think that's really important to keep that in line. So I think that just happened to be a perfect example of looking at when you hear context. A lot of people use that word context, but when you look at context, this is the kind of thing you want to keep in mind, right? And a wave 4 on our software has to have a red owl. Don't forget that. So we have that. And then, of course, when it goes green again, breaks out of the channel, and also, more importantly, out of the pyramid trading point, we're off to the races. One of the beautiful things about a pyramid trading point when it's forming here is it kind of gives you that first setup. So we get the move up, we get the move back down, and then we get the move out. So high probability bottom right there when that happens. And so it kind of sets it up for a beautiful trade. And this trade happened to also be on a market opportunity list for this week, our MOR report. All right, so that's kind of that. All right, any other questions? Any other questions? Okay, what is tick replay? Okay, so tick replay, if you go to data on any chart, every chart is individual, okay? So if you go to the chart you want to look at, let's just open up one chart, keep it less confusing. Just right click on the chart, go to data series, and this brings up the data series. And here's where tick replay comes into play, all right? It will be in here. I think I have mine set up to automatically default to that area anyway. So in any case, it would be in here, and you want to click that because what the tick replay does is some indicators require that for some historical ticks. Okay, depends on your catch and everything else, but that's kind of what it is. So if you ever get an indicator and they say, make sure tick replay is on, make sure it's on and just go to the data area. If you don't see it, then it's on. If you see the box and it's off, click the box on. All right, good. Any other questions? Any other questions? All right. Question on Apex. Can I use Apex in NinjaTrader? Absolutely. If you go into the connections area, okay, you'll certainly, let me just bring this down. This is my control panel here. But if you go into the connections area, you can set your Apex up right here, okay? And if you need help with that, because there's a lot of private information you may not want people to see here or vice versa. So just let us know and we'll be glad to help you up with that, okay? But yeah, that's that's how I trade. I use NinjaTrader and I use Apex data with that. All right, what else we got cooking out there? Do I use risk to reward calculators on intraday timeframes? Yes. All right. Now, if you're going to trade one market like the NASDAQ or the S&P, the E-mini, S&P E-mini, all right, if you trade it long enough, you're going to know what the trade sizes will be because you'll be so familiar with that market. So when you see, like, for example, if you're going to trade the New York market and you see a big price bar, that price bar could be 20 or 30 points during the day. Now, at night, it may go down to maybe 6 points. All right, so that's all going to come into play on the trade size. Likewise, what I recommend doing is you need to adjust your trade size based on where you want to put your stop. So for example, let's say I wanted to go short on this long price bar here. Well, I'd have to put my stop up here. So right away, I mean, it's a very high probability trade, but the problem is that's too much risk for one trade. So I need to lower my trade size, and this is where the risk to reward calculator or trade size calculator can help you do that. You put your amount you want to risk up there and you put your entry and your exit, and it will tell you the appropriate trade size for that, okay? So that's kind of important. All right, so you should use it. But once you get used to it, you're gonna know, well, okay, this is 20 points. I know 20 points, I better drop it down to the MNQ or something instead of the full NQ. And maybe normally I would trade about 3 contracts or 5 contracts on that, depending on your account size and whatever. Okay, so keep that in mind, all right? All right, let's see what else we got cooking here. How many people are trading, day trading prop firms right now? Now, let me just tell you something. If you have a job, okay, but you still are very interested in doing that, you can trade these markets at night. A lot of times what I'll do is trade between like 10 p.m. and 12 midnight. I'll take 2 hours and I'll do some scalp trading. If I happen to get into a trend trade, then I may be in a little longer, but usually for about 2 hours is what I like to do. And there's enough activity, all right? The average true range is not going to be as high as during the day, but there is enough activity. So for example, like during the day when I trade the regular NASDAQ, I might drop it down to the MNQ, okay? Because that way I can control my risk better. However, at night, if the average true range is 6, and I could probably, why buy 10 MNQs and pay all that commission when I can just do 1 NQ? So it makes sense at night because the average true range is less. So you can have more distance between your entry and exit and be okay with a full NQ contract. Whereas if the average true range is 20, all right, that means each price bar is roughly 20 points, then you have to probably use an MNQ unless you're trading a very significant account size, okay? So you need to proportion that based on the average true range of the market you're trading and also the amount of your account size, okay? Both those things are very, very important to keep in mind. Great questions today. Excellent. Anything else? Going once, going twice. Do I think the markets are going to sell off in 2025, even though all this money is coming into the marketplace from the Trump presidential win? Well, good question. But yes, I think we're probably, we're in a topping area. We have been since 2022, to be honest with you. Markets should have sold off like 3 years ago, based on just the normal statistics and everything. But the Fed kept pumping money in there and it kept going higher. And then now you got all this money going into AI now and all the talk about Bitcoin. But make no mistake about it, all right? The markets and real estate are in bubble areas. And so I think it's a matter of when, not if. And maybe we may go another 6 months of great times in the market, or we may fall apart tomorrow. It's hard to know exactly. All I can tell you is if you belong to our market opportunity subscription service, you know, I have support levels in there for you to watch. And if they get broken, then that means things have changed. Unless they get broken, then we just keep going along our merry way. So I do expect a bear market, and I was expecting it probably this year, but we may not see it until the latter part of this year, or maybe early 2026, or maybe next month. All right, so we just got to watch the market and see what it does. To be good in this business, it's hard to forecast things precisely. So what we do is come up with zones, targets, approximations, and then we follow price. And basically, kind of like a tail on a dog, what you want to do with basically good trading and even investing is follow the market. The market's never wrong, so follow it. And then when it changes, try to change along with it. That's the best we can do, okay? So in any case, statistically, yes, we're at a top. You know, we've been in a bull market since 2009, so quite a long time, right? So we're due for a major bear market, and I think it's coming. It's just a matter of when. All right, anything else? All right, I don't see other questions, so I think that's it. So basically, you know, any questions you have, whether you're using our software or our course material, just come here. I'll be glad to answer any of those questions for you, and we'll take it from there, okay? You guys are great, all right? Good set of questions today. All right, don't forget, my new book is out, so grab that when you can. I think it's a great book. It's 608 pages, so it's a long one. Good read, a lot of good information in there pertinent to today's market. All right, you guys have a good one, and I will see you next week.